Hey, this is Ilya Cobi from the Cobi Real Estate team at William Ravis, and I'm here with my team member Alex Langos.
Hi, everybody.
And as always, we're going to bring you a real estate monthly market report. So we're going to see what's happening on the market right now. And we're going to do some comparison between the national news and then compare that on the local level.
Very good. And then we're about to explore what's happening not only on a local level, but exactly in Brookline, right? What happened with the inventory and everything else. So,
Yeah, we're going to focus specifically in Brookline, Massachusetts. And yeah, we're going to tell you exactly what's happening.
so here we see a familiar slide, right? We put this slide on the previous report. If you guys haven't seen the February report, go back. We're going to link it up here too. But here is what we see when it comes to the rates, right? We see that when the rates start going higher, the buyer demand decreases, right, Ilya?
Yeah, definitely. So what we saw at the beginning of February, right? We saw that the rates they dropped. So they dropped maybe close to fives, right? But after that, we saw a spike increase on the interest rate, and then they went on the 7% again. This causes the buyer demand to go down. And this is something that if you are a seller, you need to know this because before you put your property on the market, you need to know what the demand is going to be out there.
Right, right.
And then you have to be very careful in pricing. So if
Right.
you overprice your property, then you may stay on the market.
Right,
And at
right.
the same time, if you are a buyer, then the benefit of the buyer's demand going down and you can afford this market, then this means less competition for you when you go out and buy a property.
Exactly. And not only that, but you have more options, right? Because you maybe have more options to put more offers in and maybe lowball them as well, right? So
Yeah.
very good. So let's see what we see in this slide. We see a 30-year rate versus a 10-year treasury yield. And as we can see here, there is a correlation, right? So when the 30-year rate starts increasing, then the 10-year treasury yield increases as well, right? And if we
Yeah.
take this out of here, we can see that from the February till March, we see the increase in the yield as well as the increase in the interest rates, right, Ilya?
Yeah, so they go, yeah, parallel to each other. So yeah, this is, I mean, this shows that from the beginning of the year that it's been some ups and down. But as we see, as we hit the end of February and the beginning of March, we saw this spike increase on the 10-year treasury yield, and that actually followed on the increase on the interest rate. So these are some of the things that we follow as well to understand how the market is going to be continuing in terms of the interest rate in the near future.
Right, very good. So now that's another beautiful slide. You can take it over, Ilya. What do we see here?
What we see here is that, I mean, things are happening. Let's say the rate goes up but the inventory goes down. So and we see this in our market that if the inventory goes down despite the fact that the interest rate goes up, then the prices will not go down. And this is a slide that shows out about the total listing count, I mean the total new listing count all across United States. And this slide is from January 2017, and we go, you remember March 2020. So something very important happened on March. So the March we have the pandemic happen in United States. That caused the inventory to kind of, at the very beginning, there was some uncertainty. So you see May, July, September, there was some uncertainty on the market, and then we had some increase on the inventory. But right after that, it follows year after year and month after month. It followed with a decrease of new listing coming on the market. As we see here, we are at January 2023. So we see that the new listing coming on the market, as we spoke on the last report, that we saw that January of 2003, we had a fall on the number of new listing coming on the market.
Right.
And this is the fact, or this is the data that keeps the home prices high. And we have seen with some of our buyers, they have to compete in multiple offer situations again. So the multiple offer situations are coming back. So if you are a seller and you are looking at this slide right now, we strongly advise you, if you're thinking of selling, you should go on the market now,
Right.
where the inventory is low, and we still have a very strong buyer's demand here in Massachusetts.
Right, right. And then as we can see here, the rate, right? If you see from January 2017 till January 2020, there is very minimal movement, right? It's like a straight line. But right after that, year after COVID, the inventory starts decreasing and decreasing, right? So it's a
Yeah.
smaller and smaller curve, right? The best opportunity to sell is probably right now, right?
And one thing that we are lacking inventory, we have to think of the fact that during the COVID years, many homeowners were able to refinance their mortgages between 2 and 3%. Now, those homeowners, when they are looking to maybe downsize or even buying a larger home, they are seriously thinking the fact they are having a very low interest rate. And that's we are missing that segment of the market, as we say, the downsizing or
Exactly.
like moving up. So that segment on the market, it's kind of very not very strong. So what we have as a strong demand in today's market is like the first time home buyer market or the buyers who want to get out of the rental situation and they
Exactly.
want to buy their first home.
Right, right. So here is what we see here, right? While numbers of homes in sales is increasing, still 47.4% lower than it was in pre-pandemic levels is exactly what we said before, right? So although we have more homes selling, it's not back because the comps, right? If you compare things, you have to look before the pandemic now. So yes, if you compare things to 2021 and 2022, it seems like it's more. But if we go back and compare 2023 to 2019, which is a good comp to compare it, we're still half, right? Instead of 1.1 million to 500,000, right, Ilya?
Yeah, so we have to keep into consideration that between 2017 and 2020 it was a normal market. We had a normal appreciation. Then during pandemic, that was not a normal market. So we saw a drop in the inventory maybe by, I don't know, 50%, as we can see on these numbers. And on 2022, if you compare to 2017, it's more than 50%, right? We have an increase, I mean, starting to see an increase on 2023, but compared to the normal market, which was 2017 to 2020, we still are like 50% down. And this is kind of the advice I would give to, again, to a seller. And hey, we're missing inventory, think of selling, you have to go on the market right now.
Exactly. So let's see the changes in inventory. This is on a national level. We have underlined Massachusetts, and then we see where we stand in the national average. So how do we compare here, Ilya?
Yeah, the national average is all across United States. The inventory is down, so it's by 6.1%. Here in Massachusetts, we see which are higher than a national average. So we are at 8.5%. And if we see some neighboring states like Rhode Island and Connecticut, Rhode Island, it's like down by 12.1%. I mean, this does happen because it's more affordable state, and maybe some people we see that are moving out and buying in more affordable markets. And because we have that movement of buyers in more affordable markets, then definitely that follows with the decrease of the inventory levels.
Right. And one more thing I want to mention here, Ilya, is that, because you see, like, what's the hot state in this dry area? Massachusetts is hotter than, let's say, New Hampshire or Rhode Island. The same thing happens in California, right? You see Nevada, Arizona, they have a bigger change in inventory because more people are moving out of these states. But the people from Nevada are not moving back in California, right? So it's the same idea that, if you have a strong state, it's more logical not to have such a big change in inventory like Rhode Island. So that's why this is the case here. So the next slide, okay, you have single family units and the construction is completed. So we can see something dramatic here. What do we see here, Ilya?
As we can see, this chart compare from 1970 to 2020. And this shows us that from 1970 to 2000, we have a normal new homes built. I mean, the numbers of new homes built in United States, they were on a normal numbers, so.
Right.
But what we saw on 2005, that the builders, they built so many homes, and then we had a crash on 2008, 2009. Then as we go from 2010 and coming to 2020, so it's been this 14 years period where we are lacking the amount of homes, new homes to be built in United States.
Right.
That keeps the inventory down. So this is because builders are not building enough homes during this year. So this is another another factor that keeps the inventory down as well.
Right. And this is like some people like to compare like this year, probably 2008, but you see has, and this is again a national level, but as you can see, there is a buildup, right? From 2005, like you said, or 2002 to 2007, we have so much inventory, which
Yeah.
there is more homes than buyers. That's not the case here for the past 14 years, right? So it's a great
Yeah.
market. So the next thing, what we see here is these companies here that they are short millions of homes, right? So what exactly do we understand from this here?
So this is a perfect example that we are talking about. This is based on a data that these companies like Realtor.com, Bank of America, Freddie Mac, Morgan Stanley, John Burns Consulting, Moody's Analytics. So all across the board, they agree on one thing, that we have shortage of homes, of inventory that we need for the demand of the buyers out there. So for those that are thinking that the interest rate is going up, the homes are going to stay longer on the market, then we might see a market crash. We don't see that. So if you are a buyer out there and then you are ready to buy, so don't listen to those like national news that the market is crashing and then the price will come down. We have real data that support the fact that we don't have enough inventory. If you see something that you like out there, and if it's the home that you think you can move in and it's your perfect home for you, don't wait for the future.
So the next slide, right? That's the $1 million question. Should I buy a home right now or should I keep renting, Leah? What would you say to that?
So yeah, we saw the previous slide. So the inventory is coming down. We know that the rents are going up. So we are also working on the rental market. So we work with a lot of investors, and we also help some of the tenants. They want to secure a place, and we see year after year, if a landlord is losing a tenant, or if a tenant moves to another tenancy, or they buy a house, the next tenant, they always pay more money.
Right.
So the rents are going up, and this is a perfect example. This rents for how many years here? Like
This is at least 30 years. And it's funny, Leah, because if you see, it says median asking rent is 1988, but I don't know where in Massachusetts we can go and live for 1400, Leah. If you tell me where they can rent for 1400, we're gonna have a lot of renters to come, because this is the median for the whole average, right? Nationwide.
Yeah, so for 1400 in Massachusetts, you're probably gonna rent a studio in the greater Boston area, or I don't know, everywhere you go, the rents are pretty much the same if you go to a 1 to 2 bedroom, 3 bedrooms. So there's a very slight difference, unless you are in towns like Brookline or Newton or Chestnut Hill, when the rents are much higher. For I mean, 3, 4 bedrooms, you can go on a high 3,000 the rent. So this is another example that we always say that rent money is spend money. It's great because when you have a mortgage, you lock to that payment for 30 years.
Exactly.
But when you are renting, that amount of money that you're paying every month might change the next year.
Exactly.
And this is something that you have to pay. I mean, if you are a tenant, you should definitely buy a house today. So
yeah, it's like taking control of your expenses, right? Your biggest expense is your housing. So if you know for a fact that your building is not going to be sold and the new landlord is going to get the rate up or your rent up, right? It's you fix your payment to the bank for 30 years. If the rates get better, you refinance, you even get it lower, right? But as you can see here, bottom line is rents keep going up no matter what, right?
Yeah, and the difference is, I want to just focus also on the last slide, that when you rent, that definitely it's 100% expense. But when you pay a mortgage, that monthly payment, it's an investment, so it's not an expense. Also, there are some tax benefits on your mortgage payment. Maybe the government will pay you close to 25% of that mortgage payment. Just talk to your accounting. What's the benefit of paying a mortgage versus paying a rent? And also, the house that you have, it does appreciate every year.
Right.
When you are paying rent, there is no appreciation on that money that you pay on a monthly basis.
And let's see what we see here as an estimated national price area December to December. What's the forecast of the next future years and what we expect for 2023?
The 2023, there is some thoughts that we might see price decline, and this is on a national average. average, but we can guarantee you that if you are living in Massachusetts, we don't see anything like that because we sell houses every day. We've been both on the listing side and representing the sellers, and also we've been representing the buyers. Then we don't see that. I don't believe that in Massachusetts we're gonna have any home price decrease, in Massachusetts. But the other thing is that the same people who think that we're going to have a decline in home prices, they think that from 2024 to 2027, we're going to have increase in home prices. So if you are a buyer and you want to buy a property, maybe this year might be the best year for you.
Exactly.
Because would you buy now? Or would you pay for the same property next year? Maybe will be 3% higher, 4% higher on a national average. But we can guarantee you that in Massachusetts, this number is going to be much higher, and we're not going to see that red sign on home prices in 2023 in Massachusetts.
Right. And another thing, Ilya, if you see on people in the technology sector, they've been getting even in this market, believe it or not, they've been getting a lot of raises, better salaries, people with stable jobs, so use that to get a higher loan, because a good income means you can qualify for more money from the bank. So use that, you can get something for cheaper maybe this year a little bit, and then in the future you're going to lock down the price. So if you guys have a good job, if you guys still renting, maybe it's time for you to think to make a move towards buying your first home.
Yeah, that's definitely true. So the sooner you buy a house, that will be your best investment. So we have a proven marketing strategy. We have a proven buying strategy that many of our past clients have benefited from their decisions. So we wish you have the same experience when buying or selling your home.
Exactly. So in this slide, we see percentage change in home prices, and this is over since 1991, right? So you're looking at about 31 years, and the percentages here are very, very interesting, right? So what do we see, Ilya, mostly from Massachusetts?
This is a very important slide, and this is also tells about the value of owning real estate. And this is, you said about it's a 30-year period, and we see on the national average, every homeowners, if they bought a house like 30 years ago, the home has appreciated by 289% on a national average. And if you bought a home in Massachusetts, that it's higher, it's 308%. This shows that Massachusetts is a very strong state if you invest in real estate. So you see stability on your real estate investment, you see a huge appreciation through the years, and it shows once again that real estate was one of the best investments that you can do when it comes to investing your money.
Right. And then lastly, too, let's mention this too. I mean, you can go to another state and buy a home for like $250,000. And if you get 10% appreciation, you're gonna get like what, 25,000. But you go to Massachusetts, you buy something for like $700,000, 10% appreciation is like 70,000, right? So the percentages have a lot to do with the home prices as well. So 300% in Massachusetts is like probably like 800% in somewhere like Oklahoma or Kansas, right? So
during the crisis, I mean, it can be some crisis during the years. We have seen it happening. Massachusetts, it's more stable as a state, so you have more stability. So even if things don't go well, because that might happen in Massachusetts, the risk is very small. But we've seen in states like Florida, for example, in the past recession, or California, or Michigan. So the risk was really, really high for the people who own real estate, because the market there went down by a huge percentage, where in Massachusetts, some of the states, we saw maybe even 5 to 10% decrease. You're thinking of buying, and Massachusetts, it's a great state, and you'll have a great investment.
So very good. Now let's see here, based on a price appreciation projected, right? We can see here 54,000, it's a projected growth in household wealth over the next 5 years, right? So this is how much, if you bought a house today for $400,000, for the next 5 years, you're gonna win, again, on national average, 54,000. I mean, you know very well that if you buy a house in this state, like we are in Massachusetts, you're not gonna see probably $200,000 appreciation in 5 years, right?
Yeah, of course, because the prices are different. So this is on an average, or if you buy a home at $400,000, but here most of the homes now they're in the 700,000 in some of the markets that we work. In Brookline, for example, the you are on the average price, you're going to be on 1 million. So definitely you're going to see more potential growth in your wealth if you buy in these areas. Yeah.
So lastly, we can see the percentage change in home prices. Let me see. So the home prices change. We can see the percentage change over the past 5 years. Again, Massachusetts, the national average is 58%. Massachusetts is 50%. You see all pretty much all countries except Idaho, which is 100%. They're closer to that 50% range.
Yeah.
This is an important slide, but not as important as the other one we saw before, that Massachusetts was 300%.
Yeah.
And we can skip this and go straight to Brookline, right, Ilya? So what happened in Brookline the past month about single families?
We like to focus in Brookline this time, and we'll see that as the unit sales went down by 66.7% in February, so February 2023 compared to February 2022. A medium sales price, I mean, here it's an incredible number, like 5,250,000.
Right,
So,
and
but
then
this is something that this time of, this month we had more expensive homes that were sold. That's why this number is on a $5 million range. So this is why, and then it says it went up by 110%. So yeah, Brookline, it shows once again that definitely it's a high-end town, expensive properties. But even if they are expensive, you can see here that days on the market, might have gone up a little bit, but it's only 81 days. So the properties are selling very quickly in less than 2 months.
Right, exactly. Then the median sale price, again, it's around $700. It's like the difference is nominal, like 4.7%. And this is like we said, right? The more expensive the homes that they enter the market, the more this jumps up. Let's check the inventory here, Ilya.
Yeah, the inventory, sales went up by 66.7%. We saw more homes coming this month, and maybe this is some certainty that some of the homeowners have that the market is strong, the buyer demand is high, and they decided to go on the market right now. And also, we had a very good weather in Massachusetts. Usually, if it's snow on the ground, the sellers are holding off for spring. But when there's no snow on the ground, they say it's a good weather. The buyer demand is strong. So we saw that on the last month report that the buyer's demand was strong. These sellers are following the realtor's advice to hit the market right now because this is the spring market.
Exactly. And then again with condos, we can see less actually unit sales in condos, 4.3% in the Brookline market. And then again, this has to do with the apartments and the condos that they enter the market. The median sales price is $790,000, which is down by 15%. That's probably because cheaper units enter the market this time around. Right after that, we can see the days on the market. What do we see here, Ilya, for the condos?
Yeah, this is very important. The days on the market has been down by 27.4%. What we saw in the last couple of years regarding condos was that more people were buying single families because of pandemics. They wanted some outdoor space. They were moving out. But we see now that the consumer confidence is coming back to buying condominium units in this town. So that's why the days on the market is down. It means that more buyers are buying condominium units. So the consumer confidence or the buyer's confidence, it's coming back. And this is another example that people want to move from the rental market or renting a condo and owning a condo. Again, this is a good news for the sellers that consumer confidence is back, buyer demand is back. So if you own a condo and you want to go on the market, and now is the right time. And we see some of, and this slide shows us that some of the sellers are hearing this and they are feeling it. So that's why you have a little increase on the inventory by 7.1%. Also the month of supply is going up. So confidence back, more properties are coming on the market, and more sellers are feeling that more buyers wants to buy condos in Brookline right now.
Right. So lastly, here we have percentage change in home prices, Ilya, and again, that's the past 31 years. And then we can see that the national average is 289% increase. And what do we see for Massachusetts, Ilya?
Yeah, so we spoke briefly about this, but this is one, again, a perfect example that real estate is the best investment out there. So if you want to make any type of investment, real estate is one of the best investment. And Massachusetts is a very strong real estate market. So if you want your investment secure, if you want to put the money somewhere, then Massachusetts will be a great state to invest your money in real estate. So we have an increase by 308%, almost 309%. Our advice: buy real estate now.
And then lastly, one thing too, Ilya, within Massachusetts as well, right? There is some very, very strong cities that, if you make a choice to buy in those, even if you have to spend a little bit more money, then you can never go wrong, right? The appreciation, we see some properties like Dedham, Norwood, right? And even nearby here, like you said, like the place we had in Brookline for sale a few months back, and people were lining up to get in because we had private showings. Everybody wanted to get there. So we see the strength in the market. We see there is demand. And if you're thinking of selling, what is the advice to give to the people, Ilya?
So if you are thinking of selling, the best advice is call your local real estate agent, call like a real estate agent like us, and let's sit down for 10-15 minutes. We can go over your plans, and then we have a proven strategy and a proven marketing plan. Then we can help you sell your property at the highest price in the shortest time frame, and also you can have a smooth transaction. We kind of have a different process. We have that team approach. So we have a whole team of professionals. Everybody is specialized on a certain area of real estate. The consumer can have the best customer experience, and they can have huge results when they work with us.
Thank you, Ilya. And everybody stay tuned for the next month's market report, and go and watch the previous one too to see what changed from month to month, right?
Thank you.